The exchange. Mortgage rates climbing for the third week as the war in Iran sends ripple effects through the economy and the bond market. The rate on the 30-year fixed mortgage now is about 6.6%, depending on where you are, credit, etc. Those elevated rates, just one piece, though, of the housing affordability problem. And your next guest says there's one way to lower costs and expand buyers' options. Let's find out what that is with Dan Close. He is head of munis at Nuveen. Dan, welcome. What is what is that one thing maybe that we can do to help?
Muni bonds. Muni bonds in their own way right now are helping drive affordability. And if you look at, just how much affordability has crept into everything in the United States, the mayor won here in New York on just a simple premise that things are too darn expensive. And so municipal debt can be used to lower the cost of housing because it's a significantly lower cap structure than anything else available.
What does that mean, a lower cap structure?
Well, you get to issue muni bonds and the coupons are exempt. So when a state housing agency issues municipal debt, they get to issue at a meaningfully lower rate than anything you can have in corporates, ABS, MBS. And they're able to pass along that lower cost to end users of housing.
Your stats are really shocking and a little scary. So in California, Nevada, New York, Florida, more than a quarter of renters, so 25+% of renters, spend over half their income on housing?
Right.
That's insane.
Yeah, and if you look at just the cost of everything over the last 6 years, up 25%. You look at CPI and all the other basket, the things that go into that basket, up 25%. The biggest driver by far of that has been housing. So if you look at the average spend for an American, fully a third of what they're spending is on housing. So if we're going to really attack affordability, it has to come in the housing market and getting those affordability under control.
So talk to us about housing bonds, because there's going to be a large part of our audience, and you reminded me very nicely, you sat down, that I was on the floor of Nuveen like 20 years ago.
That's right.
And there was a lot going on 20 years ago with housing. So what have we learned? How have we gotten a lot smarter with housing bonds than we were maybe 20 years ago?
Yeah, I think, you look at the housing bonds, they come in three flavors. You have single-family housing issued by state agencies. You can use those lower proceeds to go in and to buy down mortgages to help with housing payments. You have multifamily housing. Those are the standard two. But what's really evolved is what's called workforce housing. So when you have police and firefighters and teachers and nurses in areas that are out of their affordability range, there's now workforce housing bonds that have been introduced that help these folks that are not in your traditional affordable housing bucket help afford and get into communities that they serve.
As they should. I mean, Absolutely. If you have those people, first responders, cops, firefighters, nurses, they need to live where they work,
That's
not 2 hours outside of town because you need them there. What kind of returns are we talking about then? Are there, I know there's probably not, are there tax benefits on the housing side, or is it just more on other sides of munis?
Yeah, for most investors, it's just getting that tax-exempt income. So if you're buying state housing paper right now, a little bit further out on the curve, it's 4.25% taxable equivalent if you're in the highest tax bracket. That's in that 7.25%, 7.5%.
That's not bad.
Not bad at all.
By the way, that's about the historical return of the S&P 500 every year.
That's right. And if you're buying these, you're actually helping affordability. There's a good social component that comes with it too.
Yeah, and then what about the risk level? Obviously, we call it fixed income, which is true to a point. But listen, bonds can go down in price too. I mean, they can. They don't often, but they can.
Yeah, I mean, your state housing agency paper, that's good AA paper. Multifamily housing, usually backed by Fannie Freddie. It's more your workforce housing that has more yield opportunities and that we see the most opportunity in.
And do you vary by state? Are there better places to look now, Dan, than others? Or is it the states that we mentioned, even with the rent issues?
Yeah, we're looking at states where affordability is the largest issue because there's pent-up demand, and we think there's much better debt service coverage in those types of areas.
Dan Close, Nuveen, really interesting. 7.5% is pretty good.
That's right.
I mean, tax benefits, upper income, helping out, seems pretty positive. Dan, thank you.
Thank you so much, Brian.
Let's not make it 20 years before I come hang out on your trading floor again. I was only 7 years old back then. Dan Close, really appreciate that. All right, before we go to Power Lunch, because I'll see you there as well. Kelly's off today. Just a quick check on your markets. It's also a huge options expiration date, 6 trillion notional, 6 trillion expiring today, some this morning, but a lot into the close. Will that change? S&P's down exactly 1%. I'll see you on the other side of this short break. Stick around.
Muni Money is sponsored by BAM. Help build America's future with BAM-insured Muni bonds.
America is built with perseverance, resilience, and determination. And you can put that strength to work in your portfolio with BAM Mutual Insured Bonds. BAM protects municipal bond investments that finance the backbone of our country. You'll invest with the confidence of an added layer of security and guaranteed income you can count on. Invest with strength. Build a stronger tomorrow with BAM Insured Bonds.